Hey everyone, welcome back to Corporate Decoder. Today we're diving into Louisiana-Pacific Corporation's latest quarterly report. It's like getting a sneak peek at their homework, but instead of math problems, we're looking at millions of dollars. Let's see if they passed or if they need to go back to summer school. This report gives us a look at how the building materials company did for the first 3 months of 2025. We're talking sales, profits, and whether they're building up their business or tearing it down. Stick around and we'll break down the key numbers, what they mean, and whether LP is on solid ground. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below if you like talking about finances with other people. Okay, so this is a Form 10Q, which is a report companies file with the Securities and Exchange Commission, or SEC, every quarter. Essentially, every 3 months, it gives investors an update on how things are going. It covers the period up to March 31, 2025. First, a little disclaimer, like any good report, there's a section that talks about forward-looking statements. Basically, they are saying, hey, this is what we think might happen, but don't hold us to it. They list a whole bunch of things that could mess up their predictions, like changes in the economy, prices of their products, costs of materials, and even global events like war or pandemics. So just a reminder that what they say could be different from what actually happens. Alright, let's jump into the numbers. These are unaudited financial statements, meaning they haven't had an outside accounting firm come in to verify them. So take them with a grain of salt. This is the big picture. For the first 3 months of 2025, LP had net sales of $724 million. That is the exact same amount in net sales from the first 3 months of 2024. Their gross profit, money after subtracting the cost of what they sold, was about $19.7 million they made in the same period last year. That works out to $114 million the year before. Their net income, or actual profit after all expenses, was $91 million, which is lower than the 10 subtracting the cost of what they sold, was about $19.7 million they made in the same period last year. That works out to 1.30 yen per share for both basic and diluted earnings per share, which is the amount of profit allocated to each share, down from 1.49 yen one share, which is the amount of profit allocated to each share for both basic and diluted earnings per share, which is the amount of profit allocated to each share. Here we see some other comprehensive income. In this case, it's due to foreign currency translation adjustments, which means changes to the value of foreign money. They made $12 million in this regard, compared to losing $15 million in 2024. These are a snapshot of what the company owns assets and owes liabilities as of a certain date. As of March 31, 2025, LP had cash and cash equivalents of $256 million, down from $340 million at the end of 2024. Their total assets were about $2.57 billion compared to $1.67 billion, 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 which is about the same as what they had at the end of last year. Their total liabilities were about $78 million, which is about the same as what they had at the end of last year. Their total liabilities were about $78 million, slightly down from 890 shareholders. Was $1.692 billion compared to $1.671 billion at the end of 2024. Total stockholders' equity, or the value owned by the shareholders, was $1.692 billion compared to $1.67 billion compared to $1.671 billion. This shows how cash moved in and out of the company. From operating activities, cash flow was $64 million, down from $105 million. Investing activities used up $64 million, mostly for property, plant, and equipment. Financing activities used up $87 million, mainly for repurchasing company stock and paying dividends. All in all, their cash went down by $84 million. Now, let's look at the notes which give more detail about those numbers. We can disaggregate or break down their revenue into different product lines, such as siding OSB, which stands for Oriented Strand Board, and LP South America, or LPSA. For the first 3 months of 2025, siding brought in $402 million, OSB made $267 million, and LPSA generated $52 million. Basic earnings per share is based on the weighted average number of shares of common stock outstanding. Diluted earnings per share takes into account all potentially dilutive securities This note talks about fair value, which is what something could be sold for in a normal transaction. It's about trying to figure out the true market value of assets and debts. They have some long-term debt, specifically notes due in 29, which they value at around $328 million. They say they put these debts in level 1, which means they can easily find market prices for them. Receivables are the money owed to the company mostly from sales. As of March 31, 2025, they had $159 million in receivables. They have also set aside about $2 million in an allowance for doubtful accounts, which is money they don't think they'll collect. Inventories are what the company has on hand to sell. This includes logs, raw materials, semi-finished goods, and finished products. Their total inventory was valued at $399 million. Goodwill is what is paid above the book value during an acquisition. Intangible assets aren't physical like patents and trademarks. They're worth about $26 million in total. These are bills that the company has to pay soon, such as accounts payable, salaries, accrued customer incentives, and taxes. They had about $265 million in these liabilities. The amount of taxes the company expects to pay for the year is discussed here. The estimated annual tax rate for 2025 is 25%, a little lower than last year's 25%. This note breaks down some smaller items like reorganization charges, losses on selling assets, and gains or losses from foreign currency. This section talks about how the company checks to make sure its assets are still worth what they think they are. If an asset is worth less than it's listed for, they have to write it down, called an impairment. They didn't have any impairments this quarter. This section covers potential future losses and obligations, often for environmental issues. They have $27 million set aside for environmental reserves. This discusses warranties offered on their products and how they estimate future claims. They have $6 million set aside for warranty reserves. This note shows the changes in accumulated other comprehensive income or loss related to things like foreign currency adjustments. LP breaks down its business into 3 main segments, Siding, OSB, and LP South America. The Siding segment had net sales of $402 million, OSB had $267 million, and LP South America had $52 million. Okay, this is where management talks about what those numbers actually mean. They say demand for their products is tied to new home construction and remodeling activity, but that the economic situation is uncertain. They believe they're the biggest maker of engineered wood siding in North and South America and have been growing faster than the market. OSB is a commodity, so its price depends on how much is available and how much people want. They explain their important accounting policies and how they estimate different numbers. Here they get into some non-GAAP measures, which are ways of looking at the numbers that aren't strictly by the book. They like to use adjusted EBITDA, which is basically profit before interest, taxes, depreciation, and a few other things. It's a way to measure how well their core business is doing. The Siding segment net sales increased from last year. They made $106 million in adjusted EBITDA, up from $90 million last year. The OSB segment had lower net sales and profits than last year, mainly because prices for OSB went down. LP South America sales and profits are up slightly due to higher sales, despite some losses due to currency changes. These expenses are the costs of running the business, like salaries and marketing. They were up a bit this year. They go over their income tax situation and what affects their tax rate. This is where they talk about any potential legal problems or environmental liabilities they might have. This is all about cash, how they get it, and how they use it. They say they have enough cash, plus they can borrow money if they need to. Here's where they talk about things like borrowing money, paying dividends, and buying back their own stock. They have a credit line with a bank, which they recently increased. Here they disclose anything that could affect their financial standing that's not actually listed on the balance sheet. They talk about whether their assets might be worth less than what they're listed for, which could lead to them having to write down their value. Now, let's take a step back and look at this report as a whole. On the surface, LP seems to be holding steady, but beneath the surface, there are reasons for both optimism and caution. The siding business is doing great, growing sales and profits, but OSB is facing headwinds with lower prices and a decline in both selling prices and volume shipped. It's like they're relying heavily on one strong player while another is struggling. The expansion into South America could become a bigger part of the company's story, but is currently still a minor component. Also, they highlight and depend on adjusted EBITDA. even though it is not a recognized accounting value. This isn't inherently bad, but it is a metric the company can use to paint a better picture to investors. I would prefer they show the numbers in standard GAAP accounting language. Overall, LP appears to be navigating a complex environment. The numbers tell a story of a company at a crossroads needing to better balance its segments WANAC. And pumped environment. The numbers tell a story of a company at a crossroads needing to better balance its segments. Alright, that's our breakdown of Louisiana-Pacific's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.